Hello students, in present video I am going to explain about ninth problem from company accounts topic. I am taking this question from advanced accountancy subject BCom second year semester 3 Pankaj publications book. Previous videos links are available in the description box. Let us see the question first. Ninth problem. On 1st April 2005, the directors of the Prosperous Company Limited issued 1 lakh ordinary shares of 10 rupees each at 13 rupees per share payable at 6 rupees on application including premium, 3 rupees on allotment and the balance on 1st October 2005. Applications for 1,20,000 shares were received. Of the cash received, 80,000 was returned and the excess of the application money was utilized in part payment of the allotment monies. One applicant to whom 100 shares had been allotted failed to pay the amount due on call and his shares were forfeited. Show the journal and cash book entries to record the above transactions. This is the question. Let us see the solution for this. Let us understand the question first. There is one public limited company, Prosperous Company Limited. Their authorized capital is not given in the question. Issued capital is given. Company issued 1 lakh shares at the rate of 10 rupees each. So issue capital is 1 lakh into 10 rupees, 10 lakh rupees. Here 10 rupees known as face value of the share or par value of the share. And how company wants to collect this 10 rupees? On installment basis. First installment amount is application money, 6 rupees. In this 6 rupee, 3 rupees premium. Means company is issuing these shares at a premium. Allotment money 3 rupees. And the remaining money company wants to collect in the form of calls. Only one call. And remaining amount is not given in the question. We can calculate. Total face value of the share is 10 rupees. In 10 rupee, if you exclude premium 3 rupee, then actual application money 3 rupee plus allotment money 3 rupee. 3 plus 3, 6 rupee. 10 rupees minus 6 rupee. So remaining amount means 4 rupee. Public applied for 1,20,000 shares. Means supply is only for 1 lakh shares, but demand is for 1,20,000 shares. Demand is more than supply. This is called oversubscription. Company can allot only 1 lakh shares to them. Company allotted 1 lakh shares. How much extra they paid? Application money on one share 6 rupees and on 20,000 shares 20,000 into 6 rupee 1,20,000 extra applicants paid. In this 1,20,000 rupees company returned 80,000 rupees to them. Remaining money 1,20,000 minus 80,000 40,000. This is the excess amount received by the company through application. Instead of returning this amount to applicants, company wants to utilize this money for further installments. After application, next installment is allotment only, no? So company wants to utilize this 40,000 for allotment. So how company adjusted this 40,000? Let us see. Application money received on 1,20,000 shares at the rate of 6 rupees each, 7,20,000 rupees came. Minus money refunded. Company returned 80,000, no? If you subtract that, remaining amount 6,40,000. Actually, how much application money to be received by the company? Company is allotting 1 lakh shares only. On 1 lakh shares at the rate of 6 rupees each, means including premium, 6 lakh should come. So from 6,40,000, if you subtract 6 lakh, 40,000 extra company received. This money company is adjusting for allotment, no? Amount adjusted for allotment 40,000 rupees. One applicant who is holding 100 shares, he failed to pay call money and the company forfeited his shares. Up to forfeiture only is giving. Reissue of this 100 shares, that information is not given in the question. And finally, what is asking us to prepare? For these transactions, he is asking us to show the cash book and the journal entries. Balance sheet he is not asking. So let us see the cash book first. Cash book, nothing but bank account. Account format, particulars, amount. Debit side, credit side. To prepare cash book, two methods are there. First one, use journal entries for receiving application, allotment, call money, Entries will be there, no? Those entries we have to post in cash book. Second method is cash book. Here, cash related transactions we are going to write. Means cash receipts, cash payments. Cash is an asset. Asset comes under real account. Real account rule, debit what comes in, credit what goes out. As per real account rule, if cash is coming to the company, it is a cash receipt and debit side we have to show. If cash is going from the company, it is a cash payment and credit side we should show. So first what happened? Company received application money. On 1,20,000 shares at the rate of 6 rupees each, 7,20,000 is coming. This is cash receipt, no? Debit side we should show. To share application account. On 1,20,000 shares at the rate of 6 rupees each, 7,20,000 rupees came. Next is for receiving allotment money. To share allotment account. Company allotted 1 lakh shares, no? On 1 share allotment money is 3 rupees. How much allotment money should come? 1 lakh shares into 3 rupees. 3 lakh should come. But from application, 40,000 company adjusted for allotment, no? So that amount is not going to come from applicants. Therefore, subtract this 40,000 rupees. 3 lakh rupee minus 40,000, 2,60,000 in outer column. Next, share call. Share call money is coming to share call account. Company allotted 1 lakh shares, no? On 1 lakh shares at the rate of 4 rupees each, 4 lakh should come. 1 lakh shares into 4 rupees. But on 100 shares, there is a default. So company didn't receive call money on 100 shares. Subtract that. On 100 shares at the rate of 4 rupees, 400 is not coming. 4 lakh minus 400. 3,99,600. And credit side, company returned this 80,000 rupees, no? This is cash payment. Credit side it comes. What to write for that? This is share application money, no? Right. By share application account. No need of any calculation. Amount is directly given in the question, 80,000. Finally, find out the balance of cash book. Cash book debit side total is 13,79,600 minus credit amount 80,000. Then the balance carried on amount is 12,99,600 rupees. Credit side also total same. Cash book is completed. Take a screenshot of cash book. Cash book is completed. Now come to journal entries. In present problem, cash book we are preparing now. Therefore, application received entry, allotment received entry, call money received entry, we should not write in journal. Only transfer entries we should write. Application money, allotment money, call money, we have to transfer to capital accounts now. For that only we have to write the journal entries. First entry is for transferring application money to share capital account. To understand this entry, first we will see share application received entry. Bank account data to share application account. Public applied for 1,20,000 shares, no? At the rate of 6 rupees per share, 7,20,000 they paid. Here, share application account is created because in company's books, company is writing that from applicants, company is taking 7,20,000 rupees. For 7,20,000 rupees, applicants are creditors. In future, company has to return this money to them. So, creditor is a liability. Liability shows a credit balance. That is why we are creating share application account. Now, actually, how much amount should come through application? Company allotted only 1 lakh shares. On 1 lakh shares at the rate of 6 rupees per share, 6 lakh only should come. So now, how much money we should transfer to share capital account? On 1 share, actual application money is 3 rupees only, no? Because in 6 rupee, 3 rupees premium money. So remaining 3 rupee only we should transfer to share capital account. So 1 lakh into 3 rupees, 3 lakh rupee we should transfer to share capital account. Share capital is a liability, no? Liability shows a credit balance. Therefore, credit share capital account with 3 lakh rupees only. How this 3 lakh is coming? Company allotted 1 lakh shares to shareholders. On 1 share, actual application money is 3 rupees only. 1 lakh into 3, 3 lakh rupees. And premium money is there, no? That amount is a capital gain. Company should transfer that money to a separate account known as share premium account. So remaining 3 lakh, company should transfer to share premium account. On 1 lakh shares, at the rate of 3 rupees each, premium money came now. So total premium is 3 lakh rupees. In first entry, we wrote that share applicants are creditors for 7,20,000. In this 7,20,000, 6 lakh we are adjusting like that. So for 6 lakh, now they are not creditors. Means we have to cancel this 6 lakh rupee creditor account. By crediting, we have created this creditor account. If you want to cancel, you have to debit. Therefore, debit share application account with 6 lakh rupees. Why share premium account is created? This is a capital gain. Gains come under nominal account. Expenses, losses, incomes, gains are nominal accounts. Nominal account rule, debit all expenses and losses, credit all incomes and gains. Therefore, share premium account is created. Journal, serial number, particulars, debit, credit. First entry, share application account data. 2 share capital account, 2 share premium account. 1 lakh shares are allotted no? On 1 lakh shares, actual application money is 3 rupee per share. So 1 lakh into 3 lakh rupee we are transferring to share capital. Premium amount on 1 share premium is 3 rupee. On 1 lakh shares, 1 lakh into 3 lakh rupee. That premium amount we are transferring to share premium account. Write that as a narration. Being share application money on 1 lakh shares at 3 rupee per share is transferred to share capital account, and premium money on 1 lakh shares at 3 rupee per share is transferred to share premium account. Application related transfer entry completed. Now come to next installment, allotment. Allotment amount we should transfer to share capital account. For that one entry, for receiving allotment money, we need not to write the entry because cash book we are preparing. What is the transfer entry? See, allotment money, how much amount should come? Company allotted 1 lakh shares. On 1 share, allotment money is 3 rupees. Therefore, 1 lakh into 3 lakh rupees should come. For 3 lakh rupee, applicants are debtors to the company because they have to pay that money to company. So, debtor is an asset shows a debit balance. Therefore, applicants' accounts we have to debit. Instead of writing all applicants' names, we write share allotment account. Therefore, share allotment account we have to debit. Share allotment account debtor amount on 1 lakh shares at the rate of 3 rupees each, allotment money should come. Therefore, 3 lakh rupees. 2. Allotment money we are transferring to share capital. Share capital is also a liability because in future company should return this capital money to shareholders. Liability shows a credit balance. Therefore, we have to credit share capital account. Amount same, 3 lakh rupees. Second entry, share allotment account to share capital account. Narration, on 1 lakh shares at the rate of 3 rupees each, allotment money 3 lakh should come. That amount we are transferring to share capital. Being share allotment money on 1 lakh shares at 3 rupee per share is transferred to share capital account. Allotment money 3 lakh rupees should come. In that, 40,000 from application company is adjusting now. So for 40,000 now applicants are not debtors because we are adjusting that 40,000 from share application account. Therefore, for 40,000 we have to credit share allotment account. To share allotment 40,000 rupees. In second entry we wrote that from applicants 3 lakh rupees should come. They are debtors for 3 lakh rupee. Now, for 40,000, they are not debtors. They need not to pay because from application we are adjusting that. 40,000 debtor we have to cancel. By debiting, we have created debtor account. If you want to cancel, you have to credit. That is why share allotment account is created. And which account should be debited? Share application account. Because, see this entry. When money is coming through application, we credited application account with 7,20,000. In books we wrote that for 7,20,000 applicants are creditors. And in this entry, we debited applicants with 6 lakh rupee. Means in 7,20,000, 6 lakh is cancelled. 80,000 we return to them. So 80,000 also cancelled. Remaining balance in application account 40,000 credit balance. So in books it is showing that for 40,000 applicants are creditors. Now that 40,000 we are adjusting for their allotment money. Therefore they are not creditors now. By crediting, we have created a creditor account, share application. Now by debiting, we have to cancel that 40,000. Therefore, debit share application account, 40,000 rupees. Allotment money 3 lakh should come now. In that 40,000 we are adjusting from application, and the remaining amount 2,60,000 is received from applicants. That amount in cash book debit side we wrote now, to share allotment 2,60,000. Third entry, share application account to share allotment account. In application account there is a credit balance of 40,000 rupees. That amount we are adjusting for share allotment. Mention that as a narration. Being the credit balance of 40,000 rupees in share application account is adjusted for share allotment money. Next is for share call. Share call money we have to transfer to capital account. For that entry we should write here. On 1 lakh shares at the rate of 4 rupees each, 4 lakh rupees should come. So for 4 lakh rupee, applicants are debtors to us. Debtor is an asset we should debit. Instead of debiting their names, we debit share call account. Share call account debtor on 1 lakh shares at the rate of 4 rupees each, 4 lakh rupees should come from them. Therefore, debit 4 lakh. This amount we are transferring to share capital. Share capital is a liability, it should be credited to share capital account, 4 lakh rupees. Fourth entry, share call account debtor to share capital account. Share call money on 1 lakh shares at the rate of 4 rupees each, 4 lakh rupee, we are transferring to share capital. Mention that as a narration. Being share call money on 1 lakh shares at 4 rupees per share is transferred to share capital account. Next entry is for forfeiture. One shareholder who is holding 100 shares failed to pay call money. His shares are forfeited. Now for that forfeiture, we have to write the journal entry. Once you observe the previous entries, in first entry, we have created capital with 3 lakh. Second entry, 3 lakh. Fourth entry, 4 lakh. Total, 10 lakh. 1 lakh shares into 10 rupees each. 1 lakh into 10 rupees. With the 10 lakh rupee, already we have created share capital account. Now 100 shares are cancelled. Therefore, 100 shares into, on 1 share, 10 rupees the face value, 100 shares into 10 rupees, 1000 rupees from share capital we have to cancel now. By crediting, we have created share capital account. If you want to cancel, you have to debit. Therefore, debit share capital account with 1000 rupees. Share capital account debtor. 100 shares we are cancelling. On 1 share, face value is 10 rupees. 1000. 2. On this 100 shares, already company received application money, allotment money. Now these amounts, company is not going to return to that shareholder. So company retains that money with them. And for company, this is a capital gain. That capital gain, we have to transfer to share forfeited account. See, share premium is also a capital gain. Share forfeiture account balance is also a capital gain. So capital gain comes under nominal account now. As per nominal account rule, we have to credit share forfeited account. How much amount came? 100 shares into, on 100 shares, application money came, allotment money came. Now application money, how much? Here you may get one doubt. Whether to take 6 rupee or 3 rupee. 6 rupee means including premium. 3 rupee means excluding premium. Excluding premium we should take. So application money 3 rupees plus allotment money on 1 share 3 rupees. Why we should not take 6 rupees here? Why we should not consider premium amount while writing forfeiture entry? Because that premium amount already in first entry we have considered no? On forfeited shares, premium money at the rate of 3 rupees each, 300. That 300 forfeited shares related premium income, already here we are writing. If you take 6 rupee here, then the meaning is premium amount 2 times we are writing as a capital gain, which is wrong. That is why premium money we should not consider here. 100 shares into 6 rupee each, 600 is the capital gain. That gain we should show in share forfeited account. Next, on 100 shares, call money is not coming now. See this fourth entry. Share call account we have debited with 4 lakh rupees. Means in books we are writing that from applicants towards call money 4 lakh should come. Applicants are debtors for 4 lakh. But on 100 shares, call money is not going to come. 100 shares into 4 rupees each, 400 is not going to come from them because we are forfeiting those 100 shares. Therefore, we should credit share call account with 400 rupees. On 100 shares at the rate of 4 rupees each. 400 will not come now. That amount we have to cancel by crediting share call account. This is the entry for forfeiture of shares. Fifth entry, share capital account debtor to share forfeited account to share call account. 100 shares we are forfeiting now. Mention that as a narration. Being the forfeiture of 100 shares of 10 rupees each fully called up for non-payment of call amount. In previous problems, after this forfeiture entry, we used to write two entries. One is for reissue and the final entry is for transferring the credit balance of share forfeited account to capital reserve account. But in present problem, up to forfeiture only he has given the information in the question. Reissue related information is not available in the question. Therefore, up to fifth entry only we have to write. Take a screenshot of journal. This is the end of present video. Hope this video is helpful to you. Thank you.